What's going on, everyone? Today is December 20th. It is your Wednesday midweek review. I hope you guys have had a happy holidays so far. Hope all is well, both inside and outside of the markets. A couple things to touch over before we get into the charts. Tomorrow, you do have a final GDP quarterly release at 8:30. Also at 8:30, you have unemployment claims, a price index that's quarterly, and a manufacturing index all occurring at 8:30. So some volatility there prior to equities open. And then on Friday, you have 8:30 core PCE price index month on month, durable goods orders and regular durable goods orders. So you got core durables and regular durables at 8:30 also with that price index. And then at 10 a.m., you have a revised consumer sentiment and new home sales. So still some volatility for this week. And that's really it news related. I'm done trading for the rest of the year. I'm, got things outside of the markets that I got to cover. I've got family coming in town, got a bunch of things that I got to get ready for the holidays. So my participation in 2023 has came to a close in the market. Really no reason for me to want or need to participate in the market, even though there is news and there potentially could be volatility. Just not the environment that I'd like to trade in. Statistically, it has not been good for me. So no reason to really trade there. I will let the market trade without me, and then I will slowly work my way into 2024, as January starts to play out. Other than that, that's really it for me. We do not have a call this week, so you will see us again next Wednesday. Other than that, that's about it for me, aside from just enjoy the holidays. Henry, you got anything?
No, same thing for me. Done trading for the year. Today kind of completed the new year for me. Heading home for the holidays tomorrow, and I hope everyone has a happy holidays. Merry Christmas if you celebrate, or other holidays as well. And Happy New Year to everyone. I look forward to seeing you all in the new year and in the next midweek review. And then,
Alrighty.
Sunday after for the first call of New Year. Or I guess it'll be New Year's Eve.
Yeah, it'll be New Year's Eve.
Yeah, but New Year's Eve. But we'll see you soon.
All right, DXY. Let me see. Henry, you got me on the screen share. Is it there?
Yeah, you're good.
Okay, so dollar on the weekly. Not much has happened since the last time we talked. We obviously were expecting lower prices still, but we kind of have created this range, right? We started falling into this inverted CIBI with the idea that we could potentially pull into this BISI. We pulled back into this order block. We still have not had any weekly closure below it. So curious to see where we close this week. We have this as a potential bearish order block. And obviously we have the equilibrium that we've created over the range of the year. So not too much is going on here. We dipped down into this CIBI again, the top half of it, and kind of are pillowing off of it. But when you go down into the daily, still not much has happened. You can tell we have not pushed any higher or lower than we've last discussed. We are kind of using that bullish order block, the high of that, we're using it as resistance. Still think that we could potentially trade into this volume imbalance, into the equilibrium of this high to low. And then we also have a volume imbalance here that has now been balanced also in a bigger CIBI right here. So just kind of the idea that if price wants to, and we still do not consolidate, I would like to see price push up into these levels potentially, and then go lower and attack the sell side at 101,700, and then obviously that weekly BISI in and around 101,400. But I'm not expecting too much out of the market with all of the buy side that we've taken on indices. Also, I am relatively neutral. I am still bearish on dollar, but I do know that we could potentially just kind of range in here for the rest of the year also. So I'm not sitting here and pressing on the sell side being taken. If we take it, great. If not, I expect us to pull up back up into these ranges and just consolidate. That's really it for me. There's nothing too crazy about it. I would also say you can also utilize this as a breaker, right? You have a low, a high, or excuse me, you have a high, a low. We take out the high right here, and then we displace lower. So you could use this down closure candle as a breaker. So that with the volume imbalance, the CIBI, the two volume imbalances, and the idea that the equilibrium of the range is at basically 103 flat. all that kind of with the idea that if price wants to, it could reach higher into a premium as a retracement and then go lower into sell side liquidity. Now, if we leave all this open and we do go lower and we do take the sell side, I would expect us to potentially find some form of floor for now at the 101,400 level on this weekly BISI, and then potentially pull up and fill all this. But for the most part, I'm neutral. I'm staying on the sidelines. I don't need anything out of the market. I'll let it trade without me. And that's about it. We'll see what the new year brings. Short and sweet for me.
All right, great. Not too much to discuss on the indices either. The buy side targets we've been talking about for several weeks now have all been reached, and you can see in today's action. Let me focus in on ES. Here on the weekly chart, you can see this week, or last week, we ran through this first monthly buy side target and then this weekly target from back here. And then this week, we ran out the high from all the way back in January of 22. And so now we've purged the buy side up there. These were very long-term targets. And so after we've reached a long-term target like that, and we've created so much inefficiency on the way up, it only makes sense from this point to shift to a more neutral bias. And so we've had a large expansion, and after expansion, we can have consolidation. So we can have consolidation occur within this range. And if you're looking at a monthly chart, we still have the entire month's range that we could consolidate within. It's possible to put in another high, but as we come into the new year, I'd expect mostly just consolidation going into the end of the year. I know there is some, there is a lot of like bookkeeping market sort of things that happen toward the end of the year, just like a lot of times you see toward the end of a contract closing. So we could see some volatility going into the end of the year, but for the most part, just given the monthly range, I'd expect consolidation. Also, since we've already purged the highs up here. Just important to note on the monthly chart, we do have this BISI forming below. So after we get monthly closure right here, which happens in just about 9 days, then so long as we don't have a sharp reversal all the way down into this high, which I'm not expecting that to occur, we'll have a monthly BISI here, which is the area that price can retrace and then continue to work higher if we end up seeing that happen in the year. Weekly chart, not a whole bunch else to pull out, to point out really. You got this high right here that we've traded through, and so we can come back in to revisit the old high. We have these inefficiencies resting in here. Volume imbalance here as well. So it's hard to say at this point, since we've already purged such long-term highs, how far we could potentially retrace into the range. But just be aware of these inefficiencies resting here, and then you have the monthly inefficiency that's down here after we get that monthly close. On the daily chart, you can see today we had this return into the range that we've created after purging the buy side up here. Ran out Tuesday's high this morning, and then had an afternoon sell-off back into this daily inefficiency right here. So we can work deeper into that. Here's that old weekly high right there. So you could see price return into the 47.38.5 level, and then watching the consequent encroachment of this daily inefficiency as well. So right here, midpoint, it's like it is, I'll grab my fib real quick, include the volume imbalance right there. So 47.21 is the area I'd be interested in. Otherwise, just expecting consolidation for the most part, not a whole much to mention otherwise. Quickly on NASDAQ, same idea really. I can jump into the continuous contract as well so you can see how we traded up into the weekly city we've been mentioning up here. We'll do that real quick. All right, so normally we're not looking at the continuous contract, we're looking at the current contract, but since we don't have the price data past, I think it was the beginning of 2023 or so on the current contract, we can look to the continuous one to see what exists beyond that. Here we have that weekly CIBI up here, and you can see how we traded really nicely up to just shy of the consequent encroachment right there, and then coming back off into the range. So now we have these weekly inefficiencies resting below price right here, and then dropping down to a daily chart. same idea. So we traded over this first one right here, trading into this last outlet scanner right here. And if we see a deeper retracement into the range, you have these inefficiencies in here, that daily BISI, volume imbalance, this BISI here as well. And that one, I believe, is, yeah, we got a bit further to come down if we are going to revisit the old weekly high. So this is an inefficiency here. I'd be watching for if price isn't supported by this area here, and I'd watch for the old high to trade. That is pretty much it of my end. Any last thoughts on indices?
No, you know, the retracement's going to happen. It's just a matter of when, whether or not, you know, I don't think we get a whole lot of activity over the very end of the year, but going into January, February, curious to see if we can start to come back, you know, taking all those all-time highs, just like anything else in the markets. People think all-time highs being taken and all these long-term highs being taken, they think that that is a cue to potentially start getting in the market in that specific direction. And I've seen time and time and time again where that is where the high is created. So just, you know, keep that in mind. Keep the idea that the price action that we've seen over the past couple months can and will get filled. It's just a matter of time and understanding what you're going to look for and letting that play out just like you would on a smaller time frames. But other than that, you know, that's it. I'll leave you with this. You know, champions are broken, and a lot of times people look at champions to try to see what they have that they don't have, and it's actually the opposite. It's something that, you know, champions lack something that everyone else has, and that is an off button. And as we go into this new year, I just want to let you know, and that if you want to get where you want to get, you cannot have an off button, and myself included will make sure that that off button is nowhere near. It's not going to be around. I have big goals, and I can't wait to see where we go in 2024. 2023 was a great opportunity, and we had a great year, built something absolutely incredible, and I can't wait to see what it does and where it goes into 2024. But even looking back on 2023, I can say for myself, I had off buttons. I had points of complacency, and I had areas where I could have maybe kept going a little bit harder, and I didn't. And that will not be the case in 2024. I'm coming for it all. So we'll see. We'll see where we go. Other than that, I'm good.
Yeah, excited to see where the community continues to grow in 2024. Hope you all have had a great year with us and continue to stick with us in the new year. We're excited for the journey ahead, and Happy New Year, everyone.
We will see you guys on the 27th and then the 31st. Those are our last two events of the year. So next week, 27th, we will have a midweek review. And on December 31st, that Sunday, will be our last yearly call on the last day of the year. So there you go.
All right. Talk soon, everyone.
See you guys.